Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing 5 stocks with ex-dividends September 17th through the 21st. I have 5 stocks, so you can see the ticker symbols up at the top. We have Ecolab Inc., Broke Ridge Financial Solutions, Chubb, Republican Bancorp, and Omnicom Group. Those are all the ticker symbols there in the order that we named them off. Now, all of these stocks this week have dividend yields greater than 1%, rising revenue, net income, free cash flow positive over the last 5 and 10 years. Forward price to earnings is expected to be less than its current price to earnings, meaning the company is expected to grow their earnings. And of course, next year earnings per share are expected to grow. It's kind of, same along with the PE lowering. Their earnings per share are rising, and they've grown their dividends for at least 5 years or longer. Some of these stocks here on the list have grown their dividends for more than 10 plus years, and some, I believe, like one of them is like 54. So that's what we're going to be covering in today's video. And we covered the dividend dates, price comparison to the yield, PE comparison to the S&P 500, and the industry payout ratio, a little bit of dividend history, and some other statistics. So here, all these stocks are ordered by ex-dividend starting from September 17th all the way up to September 21st. We, of course, do have some repeats in here. And I've added a fun little ticker symbol tool that I'm going to go back and add to my pages that I've done this on. That way we can see the history of all of them. So number one, we have ticker symbol ECL. This is the Ecolab Inc. It's the global leader in cleaning, sanitizing, food safety, and infection prevention products and services. So they're in 160 countries throughout the entire, throughout the world. And here, their ex-dividend date is next Monday, the 17th of September, which means you have to buy them this Friday or prior to be eligible for that payout date on the 15th of October. Here, we have their 10-year chart of information going from 2008 up until present. We can see in the blue, we have their dividend change, price in the orange, revenue in the red, free cash flow in the green, and net income in the purple. Everything over the last 10 years has, it's been in the triple digits, which means it's been in double-digit growth on average per year. So their dividend has increased by 21.5% on average over the last 10 years. Net income, free cash flow, their stock price has grown on average more than 20%, over the year. Their net income here, actually their revenue here is it's at 13.5. So that's one of their lowest one of the growing, but still 13.5% on average increase year over year is great as far as net income goes. Now here is the new tool that I added here into my information. So here we can see the current price as of 9/1/2018. So when I did this article, I wrote it up and released it on either Monday or Tuesday. Here we can see that they are currently paying out 41 cents per share. They're currently priced, when I did this, at $153.83. They had a current PE ratio of 28.97, forward PE of 28.66. They have a dividend yield of 1.04, currently have a price to book value of 5.66, and a price to sales of 3.1. They're currently priced now at $154.90. So they did gain about $1 today since I've written this article. So when charted, it does show the current stock has a higher price over yield, which may indicate, I should change that, but which would indicate it may be overvalued at this time. The stock is also above the industry average, which is 17.6, and above the S&P 500 PE average of 24.93 currently. It is sitting at a payout ratio below 60%. It has a payout ratio of 30.5, which is really good. Dividend growth for the past 32 years. So its price to book value is at a 5.66, which is above 3.0, where value investors would consider a value. But you can see here for the past year, a price to book value right around that 5.5, 5.6 looks about where it belongs. This would be something you'd probably want to look at long term, but over the last year, this looks pretty like a normal rate for that company. So here, same statistics: dividend yield 1.07. They pay out $1.64 per share for the entire year. Low payout ratio of 30.5, and dividend growth for the past 32 years. So here, when we want to look back over this in a year, we can take a look at the current price of that date in comparison to when I had wrote this article. Next stock, we have ticker symbol BR, Brokerage Financial Solutions. They provide technology-based outsourcing solutions to the financial services industry. It operates in three segments: investors communication solutions, security processing solutions, and clearing and outsourcing solutions. Again, their ex-dividend date is on Monday, September 17th, which means you got to buy them on Friday or prior to be eligible for that payout on the 3rd of October. Here, over the past 10 years, since back in 2008, you can see that their free cash flow, their price, and their dividend has grown at large amounts, triple digits here, over 500% on all three of their numbers. And their net income is up 12.3% on average over the past 10 years. And in the red, the revenue is up 9.4% on average over the last 10 years. So lots of positive numbers here. You can see everything moving steady here. Their free cash flow, while it does spike, it's been very positive over the long run. Back during the financial crisis, they had lots of free cash flow on hand to continue paying out that dividend, which is probably why, they continue probably paying out that dividend, maybe do it a bit for the past 10 years. But good information and good financial metrics as far as over the last 10 years of information here. Again, today they did go down slightly. So here, based off their current, when I pull this information, they pay out 48 cents and like a half a cent there per share each quarter. They're currently priced, when I did this, at $136.81. Their PE ratio is at a 38.43. Forward PE is at a 29.35. Price to book is at a 14.5, which is fairly high for any sort of financial. It's not really like a financial institution, so this one may not go along those rules. I like to look for a financial bank around 1.4 to 1.7. I think that's healthy, but this is a little bit different. They provide solutions. So dividend yields at a low 1.07 and a price to sales of 3.8. So it looks like their price to sales has been coming up. Their price to book has been coming up over the past year here. So you're getting it at a very expensive price in comparison to where you could have bought it, say, pre-February timeframe. The stock has gone nowhere else but up. So as all the financial institutions have been, you've been hearing on the news that financials have been hurting. This company went, as of February, priced around $102, $100 to now currently sit at $136.81. So when charted, it just shows the current stock does have a higher price over yield, which would indicate it may be overvalued at this time. The stock is above the industry average of 27.1 for where it sits in the industry, and the S&P 500 of 24.93. It has a PE of 38.43, but a forward PE of 29.35, which still sits above both the industry and the S&P 500. It is sitting below 60% payout ratio, had a 41.7, and has had dividend growth for the past 10 years, meaning that it either paid through the recession or started paying back in the recession, or maybe they had froze their dividend for quite a while and then continued to raise it after the recession had pulled back here. So I didn't see as far as the data went back past the 10 years there. So price to book is currently at a 14.54, which does seem a little bit high. It is above that 3.0, the 3.0 value, where value investors would consider a value. So again, this shows their dividend yield at 1.07. When I pulled it off dividend.com, they had a dividend yield of a 1.42, meaning that they did, you can see here, they did raise their dividend. So this is showing their old dividend yield, and what they raised it, they probably raised it a very nice amount. Oh, actually here, you can see that they had it at 36 cents, and they raised it to 48 cents. So we can do the math on that really quickly with our calculator. 0.485 minus 0.36, we'll just say that, and divide it by the original 0.36. That's a 34% difference in a dividend right there. So they increased it by 34% just within this last couple months. So that's why that dividend yield shot all the way up now to at a 1.42, which would put it right about in this range, which, it's still a little bit overvalued for where that price is currently heading. It's shot up nowhere else but up there. Number 3, we have ticker symbol CB. The Chubb Corporation provides property and casualty insurance to businesses and individuals through its subsidiaries and independent insurance agents and brokers. The company operates in 3 segments: commercial insurance, specialty insurance, and personal insurance. They're also not only national but international as well. They're between Canada, Europe, Australia, parts of Latin America, and Asia. So this has an ex-dividend of Thursday, the 20th of September, which would mean you'd have to buy this one on Wednesday or prior to be eligible for that payout on the 12th of October. Here we can see that all of their numbers here, besides their free cash flow, which is important, but it's nice to see it positive. So here in the purple, net income up 220% or 22% on average per year. Their dividend has an increase of 18% on average over the past 10 years. Plus, you can see, I don't think this one takes into the account that recent dividend increase here. They went from 71 cents to 73 cents. Okay, so not a very high increase there, but still 18% on average for the past 10 years. You can see the biggest spike here as being between 2011 and 12 and 2013 and 14. Those big, nice little jumps right there. And in the orange, their price has gone up on average 17.5% over the past 10 years, beating the S&P 500 return of 7 to 10%. In the red, the revenue is up 14.1% on average over the past 10 years. You can see the nice little spike there between 2016 and 17, and kind of still moving in a positive direction going into 2018. Here, we're looking at their 1 year data now. They pay out 73 cents per share each quarter, currently priced at $135.46. Dividend yield of 2.11. Yeah, 2.11, 2.16, that's correct. PE ratio of 16.6. Forward PE of 12.98. Price to book is at a 1.23, and a price to sales of 1.92. So this one looks fairly valued. So here, when charted, you can see here they went up slightly today at 0.07. When charted, it does show the current stock does have a higher yield to price here. Based on the day, you can see here this showed 2.16, this showed 2.11. When I calculated this, it actually shows that the yield was slightly over the price, which I would think it's pretty valued. You're not getting it at a high price. You're not getting it at a low yield. You're getting it right about average. The stock is also below the industry average of 18.7, and also sitting below the S&P 500 average of 24.93. You can see their forward PE is at a 12.98, which really puts it well below the industry and the S&P 500 average. Dividend yield, again, right around that 2.16. Annualized payout, they pay out $2.92 per share. Very low payout ratio of 28%, and they've had dividend growth for the past 52 years, which means they've paid through multiple recessions and would be considered very recession proof. This is a very valued looking stock right now. Number 4, we have ticker symbol RBCAA, Republican Bank Corp. They provide financial products and services primarily in Louisville, Central Kentucky, Indiana, and a few other areas there. Their ex-dividend is next Thursday, the 20th of September. So you got to buy the stock again on Wednesday or prior and be eligible for that payout on the 19th of October. Here, this one, not as high as growth as some of the past companies that we've covered. Their dividend yield averages around 10% on average here. This is a special payout. I believe this was a special payout of $3 per share. Also here, their price is up 7.1% on average per year. In the purple, we have their net income, 5.8% on average per year. In the red, their revenue. And in the green, their free cash flow. So not as high of growth as the other companies here that we've covered, but it was still one of the ones that that met the list because they did have rising financials over the past 5 and 10 years. So we can see that they did have a bit of a slump here between 2013 and 14. They did have, a lot of the financials went through something there. So this one did recover and has been moving steadily in the positive direction. Here for their 1 year chart information, they pay out 24 cents per share each quarter. They're currently priced at $49.57. Their current dividend yield sits at 1.96, 1.86. Just depends on the day of the trade. Their current PE is at a 17.64. Forward PE is at a 15.21. Price to sales is at a 3.74. And price to book, which, again, this is a financial. I like to see a financial sit between 1.4 and 1.7. So here is a 1.56. They did go up today, 0.79%. So when charted, it does show the current stock does have a higher price over yield, which would indicate it may be overvalued at this time. The stock is trading above the industry average of 16.1 and below the S&P 500 of 24.93. It is sitting below 60% payout ratio. It's sitting at a 31.1% dividend growth for the past 16 years, which means they did raise and continue to pay out a dividend through that recession of 2008. So this is one of those financial institutions that 16 years, that would mean that they began paying out dividends or raising dividends through maybe sort of a pullback after 2002. So you'd want to look at the history there and see whether they froze their dividend or if that's when they started raising their dividend and giving out a dividend. Price to book is at a 3.74. I believe it's actually 1.56. So this is off a little bit. I copied the other number, which is actually below 3.0, where value investors would consider a value. So here, the stock is at a 17.6, but forward PE is at a 15.21. So that would put it below the industry and the S&P 500. Good financials, not as high as growth. You may want to do comparisons to other financials, but they are looking positive. Out of that downturn of 2013, they have recovered since that point, and during financial downturns, they have continued to pay out a dividend and raise their dividend throughout those downturns as well. So number 5, we have the last stock here, ticker symbol OMC. This is the Omnicom Group. It's leading global advertising, marketing, and corporate communication company. They are branded in the network and numerous specialty firms providing advertising, strategic media planning, buying, digital interactive marketing, and a little, specialties as well. So they're in more than 100 countries. So not only national, international as well. Ex-dividend date is next Thursday, the 20th of September. You would then get paid out on the 10th of October. So you got to buy this one on Wednesday, get paid out on the 10th of October if you were to do so. So here, over the past 10 years, this one, you can see single digit data there for their net income. So their net income is actually only up 0.09% on average. You can see here, after 2008, 2009, their net income and a few of their other financial metrics did sort of move down, but throughout that time, they sort of steadily raised it, and they are up slightly on their revenue by 13%, their free cash flow 10.5%, their net income 9.89%. Now, this company has raised their dividend by quite a bit, by 300% over the last 10 years, and their price has came down slightly. They're currently trading, let's see here, they're currently trading at a $69.62. So, yeah. Their price on average has increased, 8.1%, which is fair. So here, looking at their 1 day or 1 year information, they currently pay out 60 cents per share. You can see they raised their dividend from around 54 cents per share. So that was a very nice dividend hike there. They're currently priced at $69.62. That gives them a dividend yield of 3.45, 3.38. Yep. Sounds about right within that range. Current PE is at a 14.01. Forward PE is at a 12.46. Price to book is at a 6.72. Price to sales is at a 1.04. So here they did go down for the day by 1.15. So we'll see over time whether this company moves up or down from this position. Their financials, they're kind of, mellow right now. Not the best financials as far as the metrics go, as far as growth. So when charted, it does show the current stock does have a higher yield over price, which would indicate it may be undervalued at this time. The stock is below the industry average of 14.3. It's currently at a PE of 14.01, 14.0, depending on the day. And it's sitting well below the S&P 500 average. It is also sitting at a 43% payout ratio, which is below that 60% payout ratio I like to look for. Dividend growth for the past 8 years. Price to book value is a little high at 6.2, which is above 3.0, where value investors would consider a value. So that is all the stocks. That's the 5 stocks for you guys. So again, first we had ticker symbol ECL. Let me go ahead and get up to it. That would be the Ecolab Inc. Number 2, we had ticker symbol BR. That is the brokerage, Broadridge Financial Solutions. Number 3, we had ticker symbol CB. This is the Chubb Corporation. Number 4, we had ticker symbol RBCAA. That is a Republican Bank Corp. And number 5, we have ticker symbol OMC, the Omnicom Group Inc. Whoop, right there. So out of these 5 stocks, I think that Chubb is the most valued one, showing the most growth as far as financial metrics go, showing good numbers, showing that they're currently valued. Their price to book, price to sales looks good. Forward PE is expected to be at a 12.98, which is, earnings growing very nice there. Their earnings are expected to grow. Great dividend growth there. Great history. Very low payout ratio. This one, I would do a little bit more research as far as looking at their balance sheet and taking a look at some of their competitors. But it is an interesting one there. I believe I'm in another insurance. I forgot what the stock is. It's not Tate. But anyways, my pick for this week would probably be ticker symbol CB to take a look at a little bit further. I believe it is sitting a little bit better off financially than OMC. While OMC does have a higher yield of a price, this probably is warranted just due to their growth over the past 10 years. They're not showing as strong as growth as some of their competitors within the same sector, so that's probably why their price has came down. Whereas this one here, their price, their yield, their price to book, price to sales, their PE, and their current dividend, and the length and the growth of their dividend shows that this stock has their financials in order, and looks like they're running very smoothly here with their growth over the past 10 years. So let me know in the comment section below, out of these 5 stocks, which do you believe you would look at a little bit further, or, would look sort of interesting. So that is it for this video, guys. If you did enjoy the video, remember to give it a thumbs up. And if you are brand new to the channel, hit the subscribe button. I put out these videos every Wednesday. And of course, I always cover the stock market, personal finance, and real estate. So if you're interested in any of that, hit the subscribe button. And thank you guys for tuning in. As a quick disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is just me as a financial investor, myself, trying to help others make their money work for them, looking for some deals, which I believe CB is looking like a pretty good value buy. So thank you guys for tuning in. I will see you next time. Have a great day. Bye.